Um, so yeah, I was gonna say this: the futures versus options. The thing about futures I like the most is it rewards your technical analysis. Like this shit that we're learning, guys, it's the hardest shit in the world to learn. Like there's doctors who can't get this shit, lawyers, realtors, all those high ass, those people in life, they don't get this shit. I know software engineers personally who gave up, who straight like software engineers. Like they work so hard to get to where they're at and they can't learn this shit. We're learning this shit, and it's the hardest shit in the world. So don't you think we should be rewarded a little bit more than 5-10% for being right on our TA? Like that's the way I look at it. This is a highly valuable skill that we're learning. Um, that people would kill to learn. Like you know how many people would kill to sit down on our computer for 5-10 minutes, make 100 $150. Like people work 4 to 8 hours for that 100 to 150 bucks, and we're sitting here like, like like it's nothing. Like it's nothing. So I think that we should be rewarded for that much more than what options do.
Yeah, I heard
Hey,
somewhere. Oh, sorry, what were you saying?
no, go ahead, go ahead.
No, I heard somewhere today that
I'll mute everyone.
sorry, I heard somewhere today they're like trading is a shortcut to financial freedom, but there's no shortcut to trading.
Exactly, exactly. You're 100% right, bro. This shit is the hardest shit in the world to learn, um, and I think we should be rewarded as such. Especially if we come from like I don't have any college under my belt. Like especially if you come from a background of like of being like of kind of sucking at school like I did, and kind of like wondering what you're really gonna be good at, and now you find something you're good at, and you work really really hard to learn it. You should be rewarded for that. Is my opinion, and if you day trade, not I'm not saying swing trading options, that's the key. I will get behind that 100%. I personally can't do it, but if you can swing trade options, do it. Day trading options, in my opinion, is a trap. Um, for me, it doesn't work. If you can do it, good on you. But I personally think it's a trap. There's a reason they make those blue screenshots look so good. It's so you can post them on social media and get other people to invest in options. You're like, oh, I only paid $50 for this contract. Like you made 50, that kind of shit. It's a trap. It's a trap. You could be good at it, but you are showing off those blue screenshots can get somebody else who's not good at it to go into it and lose a lot of fucking money. So I'm telling you guys, day trading options is a trap, in my opinion. So I'm all about futures now. I wish I could swing trade options, but I suck at it. I'm gonna leave that.
Unless you have a lot of capital. Unless you have a
Yeah,
lot of
yeah,
capital, right?
yeah. If you can put down 10 bands behind, and make that 5-10% actually, like like I knew someone was putting like $1,000 behind some spy contracts or BTEs. All he needs is 5-10%. And if you have a small account, you're sitting at 5-10%. Like this is doing nothing. Whereas somebody else who has a big amount of capital, they get 5-10% and they're out. They're trimming while
Yeah.
you're trying. They're trimming while you're trying to get in. Like yeah. Futures
Or
is
forces people with smaller accounts to like hold longer, they'll be like, oh well, uh I'm at 60%, but it's only $80, and so
exactly
that's
it
not
does.
enough. It's not
It
enough. I need a
does.
hundred.
It does. So honestly, I wish somebody told me about futures when I first started because I can grow future small accounts. Like I grow them so fast. Like I have multiple hundred accounts now. I am a little bit slow. I'm more of the slow and steady wins the race type guy on those hundred accounts, but the results kind of speak for themselves. So honestly, with that, I kind of just got into this. I don't really have a class idea other than just drawing some zones on some tech stuff. So well, first thing I wanted to do was make sure I'll show you guys supply and demand zones. So if you're new, um, what we're going to be doing tonight is drawing supply and demand zones. These are the backbone of my trading style. I don't take entries unless we are in a supply. Let me get Goku out of the way. I don't get into entries unless we're in a zone or we're close to a zone or we're holding the zone. Again, the zone is the backbone of my trading style. What a zone is just an area on the chart where price likes to react and make a big move. Right now, what you're looking at is ES on a 30-minute chart, and it is a little bit crowded. It's a little bit more crowded than I like, but I can't help it, guys. Like that's just the price action we've been having lately. Like I don't normally like them to be this close together, but that's just the price action we've been having. And I can't control where the zones are. I just draw the zones, and where they are, that's where they're at, and I don't force them. That's just where they're at. So what I'm gonna do now, I'm just looking at my ES zones and just want to see if I want to adjust them. So I do kind of want to adjust this one right here to see we kind of came up and got rejected. We kind of came up out of it and got rejected. So what I'm going to do here is actually delete this zone and account for this new price action. I'm going to draw from this wick to the candle open right here.
So for
I'm sorry, go ahead.
the tech stocks that you're gonna be focusing on with Nasdaq, are you gonna focus like Apple, Amazon,
Yeah. We're gonna be doing the
Tesla?
FANG names. We're gonna be doing the FANG names. Yeah.
FANG names. Okay,
Yeah.
got it.
Yeah, Tesla too. I don't know why Tesla's not in there yet, but yeah, Tesla as well. So that's probably all I'm gonna adjust here. So what I did was I went from this top of this wick to this candle open, and I looked to the left here, to the left here, and make sure to get all of these wicks. See where we kind of came down, got kind of bounced up out of it, and then yeah. So I like that zone right there. But it's also on as in tech stocks. Everything is good here. And yeah, these bottom zones haven't even been tested yet. So yeah, that's good. All right, let's move on. So let's start with FANG, Meta. So I already have zones drawn on here, but these zones are so old, they're not even in the right colors. So I'm gonna go ahead and delete them all. Oh, and if you guys use multiple screens, do this. Make sure you have Meta on your other screen. And what this is gonna do is make sure that the drawings appear on both screens. So what can happen is you can draw something and then try and put it on another screen. Those same drawings won't be there. I kind of learned that the hard way. So I'm just going to make sure that my two charts are in sync. And they are. Let's go ahead. I'm going to delete everything. I'm going to remove the drawings.
Thank you.
Cool. And again, I'm just looking for areas on the chart where price starts to make a big move, right? So right away, I see this rejection here and this rejection here. So I'm going to start drawing the zone at the top of this wick right here. And I'm just going to drag it down to this candle open right there. And I'm going to look to the left here and I'm going to see what else it can catch. This might just be it for a while. Yeah, so that is the top for a while, it looks like. Yeah. So that'll be the top for a while. We're going to just leave it like that. So that's just a standard zone right there, guys, from candle width to the candle, the following candle open, just making sure you get all that price action and then just right there. So next thing I noticed is we came up and we got rejected again. So I'm gonna start drawing the zone. I know this is kind of zoomed out, guys. Oh, hold on, chat. Honestly, Charlotte, I would use a funded account. But you can do it with like $300. You can seriously grow a futures account as long as you trade MES only, because that moves like $5 per point. So it's really, really, really good for small accounts. You can really start at like $300. But I personally go the funded account route if you're first starting out futures, because that way you can risk somebody else's money for like a small amount of risk, right? You can just risk a small amount of your money to have access to a large amount of capital and learn to trade futures that way. All right, so let's move on here. All right, so I have the chat up now too, guys. And feel free to unmute yourselves. So I see this rejection right here. I'm gonna go ahead and zoom in. I normally do the zoomed out, but I realize it's probably better for you guys to kind of see it. Okay, so I see this huge rejection right here, right? So I'm gonna draw it from this candle wick right here. I'm just drawing a rectangle from this candle wick. Oh, come on. Yeah, Charlotte, if you have any more questions, feel free to DM me. I got you. I'm happy to help anyone start their futures account. So I'm gonna do it from the candle wick to the previous candle body close. I'm just gonna go to the left here, and I want to see what else is in this. I want to make sure that this zone has multiple rejections, and I personally like to see a bounce out of this zone as well, but I don't think we're gonna see it. So right now, all this zone has are huge rejection, right? It has this huge rejection. It has these bounces out of it. It has this huge rejection. It has this huge rejection, and it has these wicks. We'll go into it. Okay, let's go ahead and explore this price action right here. Here's the last of it. See? So it has all these wicks in it, and it has these, you kind of came up, rejected, came up, and what I'll actually do is extend this one. Just a little bit down. And I just want to make sure I get this right here. And you can draw these as long as you get kind of the thesis behind them. You can make them as big or as small as you want. As long as you understand what they are, you can make them as big or as small as you want. I personally don't trade these tech stocks. I'm gonna make them a little bit bigger because I'm more interested of when price comes into big areas of support or resistance because since I'm trading NASDAQ, the NASDAQ is going to react to these tech stocks coming into their big support and resistances. And if you guys see it happen live, you'll kind of see, it's kind of cool how it happens live. So let's keep going here. Next thing I noticed is we came down, we bounced, made this huge bounce out of it before we got rejected by this zone, right? So I'm gonna look right here. I'm looking to the left. I noticed we got this huge anomaly candle and this rejection. Okay, so I see a really good zone right here, just off this huge bounce, right? So what I'm gonna do is start from this wick right here. You see this wick right here? I'm gonna go ahead and zoom in. Now remember, remember the price action to the left and the right. We're gonna start from this wick right here to the bottom, and let's just look at it zoomed out and see what it caught. It caught all these multiple bounces, caught this huge rejection, caught that bounce, caught that bounce, caught that rejection. So guys, imagine if you just drew this zone based on this little zone that got created right here. Imagine if you just drew it from here to here without all this forward price action and see how many times it worked. Like off that one zone, you got these two huge bounces out of it. So that tells me that this is a great zone. Again, I'm looking for zones where price made a huge rejection and a huge bounce at the same time. That to me is a really good zone. That's what I'm looking for the most. Are areas where price made a huge bounce out of and huge rejections out of. And what I'll actually do is drag this zone down. Again, you don't have to do this, but I'm going to drag it down to kind of grab all these wicks to the left here. Just make sure I grab all this price action. It is a little greedy. It's a $2 zone, but I'm more interested in just seeing when price gets here. Okay, so that looks good to me. Next thing I notice is these huge wicks right here. These are kind of anomaly wicks, right? We kind of came down, we wicked here, wicked here. I see these multiple rejections, and I see a lot of rejections off of it right here, right? So I'm gonna draw. Oh man, this is gonna be a big one. So this one might need to be defined a little bit. Let's just start here and see. Yeah, that's huge, right? So what we can do is we know we have all this price action here. We can go ahead and define it. And this is what I would, this is what I would do. And just kind of define it up a little bit. See, bam. So now we got this huge wick, this bounce out of it, this bounce out of it. Kind of came up, got rejected by it. And we made it smaller. Yeah, I like that. 315 and 317. So yeah, it looks like Meta likes these little $2 zones, 330, 320.
So what do you do when the price goes to those zones?
I kind of just see how well my bias is always going to be if we're coming up to it, it's going to be a resistance. If we're coming down to it, it's going to be a support. I just look to how price reacts when we come up into the zone. Because I mean, I could draw a bunch of levels here, but I just see I see a level here, I see a level here, I see a level here, I see a level here. So instead of drawing hello levels, I just kind of put all these levels in a box, if that makes sense, right? It's just places where price likes to react. So my bias will always be this is going to be an area where it reverses, right? Because I know we've had a lot of trend days lately, but that's kind of not the norm. So my bias will always be this is support and this is resistance. But I know if this support or resistance, if this zone breaks, then we're going to leak to the next zone pretty fast because you see the price action between these zones is nice and fluid. And we can go back to like ES, which is what I normally trade, and see the same thing. Like I trade on a 3-minute time frame, and you can see how price reacts to it on a smaller time frame. And I think we actually got long out of here on our last trading day. This inverse head and shoulders, we got the market structure. So you see how this market structure shift occurred in a zone. So this is a beautiful trade. I mean, we did get long off of it actually. I don't know if you remember BW, but from third.
No, I remember, but
Yeah.
for the people who are on here, what is the market structure shift
Yeah.
for them?
So to me, a market structure shift, it starts on a lower time frame. Or for me, I'll trade it on a lower time frame. I mean, it's going to happen on all time frames. So let's look at the market structure right now, right? We're in a downtrend. What starts happening is every push up gets sold off, right? So no matter what, we're in a downtrend. But what starts happening is you start getting a push up here, right into support, right? You start getting a push up, and what starts happening is we start breaking these resistances. See, we start breaking, put it in lock mode. This is what I'm seeing. We're starting to break all these selling wicks. We're starting to break them. This push up broke all these, right? So in order for this downtrend to still be valid, this next push down, it needs to break this low right here, right? In order for this downtrend to remain valid, we need to come up and the sellers need to push it down and break this low. What ends up happening is sellers pushed it down and we created a higher low, right? We came down, sellers pushed it down. They were unable to come down here. This ends up being our support now. What I ended up doing, or what we ended up doing, was getting our longs around here, 42.60, and we took them for 10 points all the way up to here. Yeah, that actually was at 20 points. That was actually a 20-point long. I sold mine at 42.70. That was actually 20 points out of this little market structure trade occurring on a smaller time frame. What added confluence is it happened in a zone. So you see, I wouldn't have taken this trade if it didn't happen in a zone. But you guys see, we draw our zones in places where price likes to react in a big way, whether that's up or down. See, it's nice fluid movement between these zones. And we can go back and you can just see nice fluid movement between these zones. And I drew these ES zones like at the beginning of October, so they've just been working. So yeah, let's go
So
back.
in other words, a market structure shift is when we are in a downtrend, whatever time frame you're in, we're in a downtrend, making lower highs, lower lows, and as soon as we actually displace and create a new higher high on that time frame, and that's the market structure shift. We're lower high, lower high, lower high, and then a higher high. Now we're looking for a higher low.
Exactly.
And that's the reversal.
This didn't cause a huge reversal, but it did cause a perfect trade for the long, right? This is a great trade for long because, this was the sellers finally exhausted and they finally sold it off right here. And I guarantee you this was actually, I can see my mind's eye here. This is probably like a 0.618 at the fib level. Look at that. I can see it in my mind's eye, bro. We sold off right at the 0.618 level of the Fibonacci. And then it's like that.
Yep.
Perfect.
And that makes it a bear flag as well.
Too. Oh my god, look at this BW. I bet there's a fair value gap right here.
Yeah.
Right at the 618.
Yeah, fair value gap. It's a bear flag. So whatever the levels are, whatever strategy you have, all of the technical analysis are the same. People are still looking for the same movements. So it doesn't matter what your strategies are, but it's important to have support and resistance levels.
Exactly. That's going to be the backbone. Even if you didn't have the fib, even if you didn't have any of that, even if you didn't have an understanding of market structure and you just traded these zones, you can see fluid movement between these zones. I expect like this ended up like, a lot of people ask me this, what if price slices through a zone, right? And it doesn't get respected. They ask me, should I delete the zone? I say no. Wait until price comes back to that zone and see how price reacts. Because see, we sliced through it here and came back up and acted our resistance. So it's just support and resistance levels, guys. I just make it easier on myself. Instead of drawing a bunch of levels, I put all my levels in a box. And then I just use my existing strategies, my knowledge of price action to take my trades. So yeah, this is a very, very supply and demand zones. They're an extremely strong backbone to have in my opinion. You can use levels and they're great to use. No hate against them, but this is more of like kind of just stuffing all the levels into a box. It's kind of more of an easier way to find your levels, right? In my opinion, because I mean, there's so many levels here that I see personally that I don't know what to do with. So I'm just gonna put them all in a box, and I just know that as long as price comes into my box and my box is an area of the chart where price likes to make a huge move, that it's gonna react pretty nicely. You won't catch me making trades in between these zones, because I know that I can just wait patiently, wait for a price to come into a zone, and I'll make a good trade based on what happens in that zone, whether that be a rejection of it or a breakthrough and a hold and a continuation. So let's keep going here on meta. Meta's actually almost done. I guess it kind of might have been all the way to 285. I don't see. Yeah, I don't want to. Okay, so let's keep going here. All right, so the next thing, I mean, honestly, I noticed this huge, and I would call this like an anomaly thing. So this is what's grabbing my attention right now. I kind of want to see where this came from. So what I'm gonna do is go to the left here some more. Okay, now I see. So you see this huge move up. Let's go ahead and draw a rectangle. Let's not even imagine this forward price action there. Let's just say we drew our zone from this bottom wick right here, and I'll zoom in so you guys see what I'm talking about. Where's my little zoom tool? Right here. Caused this huge gap up, right? So let's draw our zone from this bottom wick to probably the next time we bounced out of it, right? To right here. And actually, let's draw it a little bit bigger. Right there. So that's 1, 2, 3, 4, 5. 5 hours of price action right there. That caused a huge gap up. Now let's go to the right and see what it caught. And you can see again right away, you could have used this zone to go long and short off of, right? Long out of here, short out of here, long out of here. So, and then look, that huge anomaly weight came down to this zone. So what I'll actually do is extend this down and make sure I catch this entire width right there. Make sure I capture that entire thing and just stop right there. I don't want it too big. It's like a $4 zone, kind of huge. Yeah. Again, I can't control how big or small these zones are, in my opinion. I just draw them as I see them. You can make them smaller if you want. I'm kind of debating if I want to go. Yeah, I'm not trading it, so I'll just make it as big. I'll make it this big. Okay. Let's keep going here. So that's 288. I doubt Meta's gonna come down here. So probably just draw like 1 or 2 more and be done with Meta. So the next thing I notice, let's see, is this.
And you do all your zones out of the 1 hour time frame, right?
Yes, I do all my zone on the 1 hour time frame when on regular trading hours. Yeah, because I mean you could do them. I don't see anything wrong with doing them with pre-market hours on. I just find them a little bit easier to draw on regular trading hours. I do draw zones on futures on all hours because I kind of forced to. So yeah, I think that's fine. Either way is fine. Whatever you prefer there. I mean, if price action is price action, it's gonna react. It's gonna react when we get to an important level, whether that be pre-market or regular trading hours. So I see all this chop right here. I'm trying to home in on it here. Okay, so I see this huge rejection down. Let's go ahead and zoom in on it. Let's zoom in on this little area right here. So I'm going to go ahead and start a zone at the top of this wick right here. And it's already really small, so I'm just going to drag it down. Make sure I capture this entire wick right here. And I'm going to zoom out a little bit and see what kind of stuff I caught here. Just off that little wick. Sorry. Okay, so we got this kind of this bounce out of it right here. So you kind of got first a rejection and then a gap up out of it. So what I'll do is extend it. Make sure I get right here, pulling up, you guys can see that this wick and this Look right here, make sure I capture all that, and now we can kind of see a nice little zone here that's being respected, right? And what you can do again is extend it a little bit more to make sure you get this bounce out of it as well. There we go. So I think this is a really good zone because you got multiple rejections and bounces out of it. It is a little bit big. But yeah, I'm not trading it. You guys can make it as long as you understand them. I'll say it again. As long as you understand kind of the hypothesis of the theory behind supply and demand zones, you can make them as big or as small as you want. As long as you understand you're making your boxes for supply and demand zones in an area of the chart that has that the price likes to react to in a big way, then you're pretty safe in making them as big or as small as you want. What is this? It's like a 3-4 dollar. Oh damn. Whatever. Can't control it. Yeah, and then I'll probably draw one more. Damn. Can we really come down to 3D? Whatever. I'll draw one more down here. So I see these two wicks right here. We got huge bounces out of it. So let's start drawing a zone at this bottom wick right here. And just draw it up to the very next time we bounced out of it. So we came up, bounced out of it right here. So I drew it from this bottom wick. The next time we bounced out of it, I'm gonna look to the left here. Kind of got this out of it. I don't want to make it too big, so kind of ignore that stuff there. That's good. I guess we'll extend it so there's not much price tag. So make sure to get this bounce out of it as well, and then a little bit more of that with as well. I think meta is done for the most part. I can't imagine it coming up all the way down here now. And if it does, I'll just
Someone asked a question about like how to enter with the zones. I don't know if you want to like zoom in like on a smaller time frame so you
yeah,
can show
absolutely.
them.
Yeah. Do I enter it when it moves out of the zone? Yeah, so I have multiple strategies for when we're in the zone. So I'll show you a break out of a zone strategy. Because I'll enter when it
Can
moves.
y'all hear me?
When it moves. Sorry, go ahead.
Oh, I'm sorry. Can y'all hear me?
Yeah, I can hear you.
Okay, I just wanted to add on to that question that the guy just asked in the comment. Your top-down analysis, like what? I don't know if you already answered, but what time frame do you start on? Do it be the hour, 4 hour?
So okay, I heard you. Okay. So I actually I'll go through the whole thing. I chart my zones on the hourly, and then you see these volume shelves. I chart those on the weekly, the daily, and the 4 hour. And I'll go through the whole thing on Meta right now. So I do kind of do top-down analysis, but in a kind of a reverse order because I am a day trader. I chart based on day trading. I don't chart based on swing trading or anything like that. I chart based on, I draw my zones on areas of the chart where price likes to make a big move and price likes to go to daily. Like I'm not going to sit around and wait, even a whole day for price to come to a level. So that's why I make these zones on the hourly first to make sure that I have a trade set up every day, no matter what. So let me go back to Meta and I'll show you what I'm talking about. Like, see, based on the zones we drew here, you can see you can make multiple trades on Meta. See off these zones on a daily. So yeah, these zones on the hourly, they're good for day trading. If you draw them, the higher time frame you draw them on, the bigger the move that I would expect them to make. But you kind of got to tailor your trading style to them, right? So if you draw your zones on the 4 hour, the daily, and you make your trades based on them, you kind of got to accept that you're drawing on the daily, and you're going to have to accept a wide margin of risk, and you might have to hold it for like a day or and a half, for a long time. So yeah, I draw mine on the hourly. It's based on day trading. If you're a swing trader, you can draw on the weekly, the daily. I mean, their supply and demand is on every time frame, right? I draw mine on the hourly so I can day trade off of them. And then Racy, do you enter when it moves out of the zone? So again, I have multiple strategies. So when it moves out of the zone, that is my kind of like my favorite setup. But check this out. There's going to be times where like I took a trade when we're in a zone, right? We came down. I know that we're in a zone. We made a higher low in a zone. So I'm going to take a trade right there. an entry of a break out of a zone, another entry I would have taken if I wasn't already in right here is we broke out. And what you'll notice is we will break out. We always, not always, this is the entry for the retest. We break out. You see this retest right here. So this is a trade I would take when we would break out of a zone, come back down and retest. If we broke out and kept going, I wouldn't chase it. If we broke out and we had an entry like this, I would definitely get in right there. See, I have multiple strategies for when we're in a zone. Again, these zones allow for multiple strategies.
Yeah, like that one right there's a tweezer bottom, so that's a good entry right there.
Exactly. See,
Yeah.
all your existing technical analysis is only going to be enhanced by these supply and demand zones. You know that a tweezer bottom in a zone in an area where price likes to move is going to account more for like a tweezer bottom, say right here, right? Where we're not in a zone at all, where a retail trader say, oh, tweezer bottom, let's go, and then they immediately get stuck, right? So you know that these patterns they play out more better than when we're in a zone. It's just
You don't trade outside the zone, you say, right?
no. I trade in a zone or as close to a zone as possible. So
okay,
like,
that's good.
yeah. So we break out of a zone. I wouldn't have if I wasn't in right here on these shorts. I would have waited until we came down. And again, it's hard not to chase, right? But you kind of got to trust that this is an important level that's going to be retested. There's your entry right there if you're not already in right there.
Yep.
And then guys, I see another market structure shift right here, kind of a small one, but we were just talking about it. You kind of see that we were just talking about we came out of a zone, right? We started making higher lows, higher lows, higher lows, and then finally we came up here, and what starts happening? We start making lower highs in a zone. That's 3 lower highs in a zone. That's 3 entries in a zone. You see that? So again, if you know what to put in your zones, there's multiple entries that you can make within a zone. So as long as you're patient and you wait for price to get into a zone, you use your existing strategies to say, okay, we're in a zone now. Are we going to continue? Well, let's see. Well, did we break out? No. In fact, we're starting to make lower highs, and then you kind of get caught up in this chop right here, and that's to happen, especially at the end of the day, and then we finally break down. So yeah, these are just areas of the chart that you drew out that you know that price likes to make a huge move out of. And again, I'm drawing these on tech stocks. I don't trade tech stocks, but I'm drawing on tech stocks because I trade NASDAQ, and NASDAQ reacts to these tech stocks. So I gotta know when price enters these zones on tech stocks because it helps with confluence on my NASDAQ trades. And if you guys that's a little bit harder to explain. So honestly, that's another class altogether. But if you guys hop on live with me or watch my confluence class on YouTube, we kind of get more detail on how I kind of watch the rest of the market to make trades on my NASDAQ and ES. So I'm gonna draw one more zone here on Meta before we keep going. And that's actually where we're at right now. So let's actually come all the way back here. So I see this huge move up, right? Let's go ahead and draw a zone. Let's not even let's not even imagine all this forward price action. Let's just look at where is it? Right here. So what I'm looking at is right here. This huge move out off of this little Morningstar type deal right here, right? So I'm gonna do is draw a zone from the bottom wick of this Morningstar to the following candle open, right? And let's go ahead and look to the right and not even imagine all this forward price action. And you can see every time price comes to it, bam, huge rejection out of it, come up, gapped up to it, bounce out of it, start ranging in between it, come up to it, another downtrend out of it, came up, got rejected by it. So right away, you can see that this is a really good zone that has multiple levels that got rejected and bounces. Just off that one zone that we drew from way back here, guys, look at that. All this forward price action that got respected by it. That one small zone. And what you can actually do here, I'm actually going to do this, is extend this zone up a little bit. Because we did catch a bounce right here. There we go. And now look at this zone that we just drew. Look at how many times price reacted to it. There, I think meta is done. So now I'll move over to the weekly, and I don't do this for I only do this on the things I trade, but somebody asked on how I do my whole top-down analysis. So from here, I would move over to the weekly. Oh man. Honestly, I should draw zones all the way down to here. Okay, so oh my god. So what I'll do is look at the range that we're in on the weekly, right? So what I'm gonna do is see that we'll call this our swing low right here, right? So what I'll do from here is grab a fixed range volume profile, and I'll start from right here. What's gonna happen is a little bar will appear on the screen. You can stretch it out. And I'm just gonna extend it out to right here. Man, this is a huge trend, but whatever. Right here. Oh, that's not my colors. Oh, hold on. Yeah, whatever. So what's gonna appear is volume on the right. Oh, I'm sorry, on the left here, right? So what I'm gonna do now is zoom in on this volume. And I'm gonna mark out areas of the volume where let me zoom in right here. These are what's known as volume shells. You'll see in my ES chart all over the place. I find these on the weekly, daily, and 4-hour. What I'm looking for are huge sticks of volume on the left here, right? So a series cluster of volume. So out of this huge cluster of volume, this is the biggest volume stick right here, right? So I'll mark it off right there. That right there is what's known as a volume shell. And I'll just mark that off as volume shell. And we'll go down here. And I'm not gonna do this on every text. This is only I only do this on what I trade. But I just wanted to show you guys. So we'll come down, come down, come down. Now I notice this huge volume stick right here. I'll put them lower right there. Come down, come down. So right here, I notice this huge volume stick. I'll put one right there. And now, since I'm finding these on the weekly and daily, since I day trade it, prices come to these volume shows on the daily. I'm sorry, when I'm day trading them, I know that we're about to make a huge move, and I make entries based on my volume shelves. So what I actually did right now is I drew a volume shelf on what's known as a point of control. When you draw this fixed range volume profile, a red bar will appear. That is the biggest volume of the range. So this is where the most people are interested in getting a long or a short. I don't personally mark that off as anything special. They're all volume shells to me, but definitely mark that off. Let's go down. Right here in this volume cluster, right there. And I used to draw these volume shells on the hourly, but I draw these zones on the hourly. So I was, having multiple hourly levels not only crowded my chart, but when you think about it, it makes no sense. Like, why have multiple hourly levels? So yeah, zones on the hourly and these volume shells I find on the weekly, daily, and 4-hour. And we'll go right there. And that looks good. And I'll probably put one right here too. Just kind of an anomaly. 298. Yeah, that's $2 a day. All right. Cool. Okay, and then we'll go down to the daily. Same thing. I kind of select the range that we're in. Draw the fixed range volume profile from this swing low right here. Make sure I grab all this price action. Do it again. Oh yeah, this is just so I know. I mean, look, they're already kind of lining up too. So that lines up, that lines up. And I'll probably draw a new one. Let's see, right there. So this volume kind of sticks out. I'll draw a new one there.
Which icon was that on the left again?
The indicator?
Symbol, yeah, which symbol is that?
This is the fixed range volume profile. And actually, you can find it on your drawing kits.
Which is
So
okay. Oh, okay, under there. Okay.
yeah, let me see here. It is one of these drawing tools. Oh, here it is. In projections. So right here. So where you find your long, short, it's right here. Fixed range volume profile.
Okay. Okay. Fixed
So what
range.
Yeah, and what you can do with that is select a range and select a swing high and swing low, and it's going to show you the volume, of that range. And these are just going to be very, very important level for people, where a lot of volume came in and price reacted in a huge way. When we go down to a smaller time frame, you'll see how price reacts to these volume shells, and you'll be like, wow, that's ridiculous. Again, this is another way of finding levels, an easier way, in my opinion, of finding levels. Um, Again, I trading is as simple as you make it. I just try to make it as simple as possible for me. I know I should have hella levels, but I kind of don't want to spend hella time on the chart looking for these levels. So I rather just find them. And this is kind of an automatic way of finding them. Honestly, when you guys see me, trade the Fibonacci, that's kind of another simple way of finding levels. There's levels everywhere in the market. This is how I find mine. So that looks good. And now we'll go down to the 4 hour. Honestly, I might not even go down the 4 hour now. This looks nice. I guess let's just see in case there's anything that sticks out. So again, we'll select the range from here. And we're gonna go all the way to the right here, get all this price action. And let's look again. If there's anything we missed. Let's see here. You can see right here. 322 to 325. That's a good range. You can see right there. Come down. It's a nice little dip right there. I think that's about it. That looks good. That looks good. Yeah. So that's how I find my volume shelves. Daily, weekly, and then we can go on them to the 10-minute and kind of see how price reacts to them. And you guys see that? See how price reacts to these volume shelves? Like huge moves out of them. Huge moves. Huge moves. Nice rejection. Look at that. This is why I like volume shelves. Look at that. Come down. Look at that. Where'd that would come from? Like that's kind of crazy.
But you don't trade those. You just
No,
use
no,
them.
I trade these. I trade these volume shelves. I use them because look. See, a lot of the time these volume shelves they land in my zones.
But what if they're out of the zone?
Then I won't trade them.
Okay, there we go.
Yeah. They're just conflicts in my zone. And if they're out of the zone, then I just I look how price reacts to them, and I kind of laugh like because I know that my level hit, but I don't normally take the trade unless this is a really really good setup. Like honestly, I see this setup on a 10-minute right now. I probably would have taken it because it's close enough to a zone. What I'm looking at right here is the higher low that got created. So we came up, made a high, came down, and then we rejected and made a higher low. So I would have gotten in, if this is futures, I would have gotten in right here and made that much stop loss. Because it came up to this volume shelf, got rejected by this volume shelf. I would have gotten in right here, and my stop loss would have been that volume shelf. These thing about these volume shelves is once they get touched, they hardly get revisited, right? So yeah, I would definitely would have taken that trade. It's not an A plus trade, but pretty close to a zone. Got hit by this volume shelf. We made a higher low. Yeah, I could see myself taking that. Um, if it was options, I wouldn't take it, but I trade futures now, and on futures, I could take these setups, really low risk to reward setups. I'm sorry, really high risk to really low risk, high reward setups because the risk right here is just the volume shelf, 322.78. I take my short position there, I just risk the volume shelf. It never gets revisited. Um, so yeah, so it depends. It just depends. Um, my favorite trades are obviously going to be when price comes up and it rejects the volume shelf in a zone. Like that happens a lot. See when price comes in, like look, it happened right here. Came up, held the volume shelf, came down, rejected the volume shelf in a zone. So yeah, all the trading strategies I use, they just complement my existing supply and demand strategy. Wow, that looks good. Metal looks good. If I was still trading options, I would definitely trade it. All right, so that's only have 10 minutes here. Dang, that went a little bit longer than I expected, guys. Sorry about that. I think that's good on meta. Yeah, I wanted to draw more, but we got sidetracked. Let's see here. I think. Oh, and then the fib. So last thing I'll do is I'll go back to the weekly. Oops. And I'll draw Fibonacci on the range that we're in. because these fibs, especially on a larger time frame, they are huge, huge, huge levels. And I'll show you exactly what I mean. I'm gonna go back to SPY in a minute, and I'll show you exactly what I mean. So what I'm gonna do right now is draw a Fibonacci on the current range that we're in. The current range that we're in is this right here. From this swing low to this swing high, that's the range. So I'll draw a fib from here to swing low to swing high. And I'll mark off the important fib levels. So what I'll do is draw one right here. Oops. Oh, let me do that.
And you're on the weekly on the fib.
Yeah. On the weekly, I draw the, and actually, this 0.5, it kind of lines up perfectly with this volume shelf. See, it's not even that close. It's not even that far away. The volume shelf is 304.53. The 0.5 is 302.21. So when that happens is I'll actually just volume shelf slash 0.533. So now I know that volume shelf and point. Now that's going to be a huge level. I'm going to be very, very interested to see because we have multiple levels of confidence here. We have the 0.5, we have this volume shelf, and this is the 0.5 on the weekly, and we have this zone right there. So I'm really interested to see how meta reacts right there. What I'll do now is I'll draw and I think again this 0.618 it lines up perfectly with this volume shelf. Yeah, absolutely. Why volume shelf not in single dessert? Can we just have volume shelf inside? Yeah, I can totally, honestly, yeah, you can definitely just trade volume shelves straight up. The volume shelves, they complement my zones really well, but you can definitely just trade volume shelves if you want. I don't see anything wrong with that. Like you can see how price tracks and volume shelves, that could just be your strategy. I really don't see a problem with that.
Raj, just a question.
Uh-huh.
Why did you draw the beginning of the fib at that low instead of the bearish candle low?
At this low right here, instead of this right here.
Yes.
Because this is the, I mean, you could honestly, you really could, but I just like how this is a morning star that kind of started this huge move up. And honestly, if I did draw it from right here, it's not much of a difference. So again, it's going to be what you prefer on the fib. I like drawing them on the start of trends, right? To me, this is the start of the trend rather than the bearish candle right here. It's going to be right there to me. Again, it's really going to be what you prefer. This right here, it doesn't make too much of a difference. Yeah, so it's gonna be what you prefer. It's gonna be what you prefer.
Okay, cool. Thank you.
Yeah, not a problem. Not a problem. Honestly, the bigger the range of the Fibonacci, the higher chances of it working. But in day trading at least, it works. It works when I draw the most recent range. But I'll show you guys something cool on SPY right now. Oh, hold on. So real quick, this 618 lined up perfectly with this volume shelf. So I just drew volume shelf slash 618. And I'm gonna draw one more level right here and it happened again. So this 0.786 lines up perfectly with your volume shelf. And again, this is crazy. I'm gonna be really interested to see how meta reacts to this. I've actually never seen. Oh wow. So the volume shelf lines up perfectly with the Fibonacci levels on all three of them. So let me show you something real quick on SPY. And I'm actually going to delete all these zones on SPY too, because it's been very long. I'll do this at work tonight. Oh, I didn't want to delete Goku. Shit. I'll put Goku on. Okay. New drawings. So let me show you something cool on SPY. And it's adjusted. Let me see if it's adjusted. Oh, no. Okay. So if you draw the Fibonacci from the COVID lows, March 20th, COVID lows to all-time highs, because we are technically still in an uptrend from COVID lows at least. And we take it from COVID lows all the way up to all-time highs and extend it. Look where we bounced at. look what started this huge rally from COVID lows to all-time highs. 349.02, the 0.5 Fibonacci of this range started this huge rally up, all the way up to 460. 349 to 460 off this. So yeah, definitely this pie chart right here is exactly why I started drawing these Fibonacci's on the weekly. I'll even show it to you again. I think it happened again recently. And this right here is why I drawn on the most recent range. Let's see here. So right here. So imagine this for price action here. I remember. So see, we draw it from here to this weekly high, and then we retrace down to the 0.5 again. Bang. And it just happens over and over. Or I think right here it's going to be more of a 786 bounce. Yeah, so from this range to here, 786, keep going. And now I would draw the Fibonacci on SPY from this swing low. Oops. From this swing low. Yeah, that's only really high. Yeah, sorry guys, I meant to draw more zones today. We had so much fun just talking about everything else. And oh, look at that. It happened again. But this time it doesn't look like we're gonna hold, huh? So the Fibonacci from this rate, from this swing low to this swing high, we did catch a bounce at the 0.5 at 420, but it looks like it's not gonna hold this time. Every single bounce out of it beforehand, you guys saw we've had huge moves out of it, but this time we did come up and we got rejected immediately. So let's see where we catch our bounces now. So maybe 411, maybe 397. We'll see. So yeah, that's it, guys. That's all I have for you. I meant to draw more zones today, but I get so distracted talking about everything else. So yeah, hope you guys had fun today. Yeah, if you have any questions on futures, on anything discussed today, anything at all, please hit me up. If you want this on this meta chart, if you guys want this meta chart, I can drop it in my channel with the levels marked out. If you want to kind of put it on your chart, see these levels play out. I'll always keep you guys updated. But I have a feeling that meta is about to get very volatile here because man, 0.5 weekly volume. Yeah, this is gonna be fun for meta. Okay, all right, I'm out of here, guys. Hope you guys had fun.
Before you go,
Yo, what's up?
what like platforms could I use to trade futures on?
I use Tradeovate. It is the best, yeah, or it's the best one for the futures. And then if you're just starting, I'd recommend grabbing a funded account. That way, as you're not risking your own money. Yeah, no problem, no problem, no problem. No problem. See that. Yeah, anytime, guys. If you have any questions or anything, let's see one more thing. Like, yeah, probably this is right there. Yeah. Oh yeah, I missed the zone. Hold on, I'm gonna draw one more zone right here. I missed this one. So I see this huge move up off this wick right here. I see these multiple rejections out of it. So I'm gonna draw it from here to here. There we go. Almost missed that one. That was an obvious one that I really missed. Okay, now we're good. Now meta's ready to draw. Now meta's ready to trade. You still like to well? Hey, absolutely, man. For the one-on-ones, this I'm free Thursday, Friday, and Saturday. So yeah, hit me up on those days. Hit me up on those days. And then for futures, yeah, go for Tradeovate to start there. Tradeovate has a really good paper trading program too. I would definitely explore that. Or you can go the funded account route, and I have 3 funded accounts now. That to me, if you have a small account, just go. If you have a small account, there's no better option than funded accounts, in my opinion. If you have a small account and you're good at trading, go over to futures and get a funded account because you can pass that and risk a small amount of your money to have access to like a good amount of capital. I think that's a really good way. Wow, these zones are fucking fire. Okay, I'm out of here, guys. Any more questions or anything? Hit me up on the DM.
What do I need to look up for the funded account? I'm sorry.
Say that again.
What do I need to look into for the funded account?
What do you need for the funded account?
What do I need to look into? Like, is a certain like website
Oh,
or
here, I'll
something
put
for
up.
the
I'll
funding?
put. Yeah, I'll put it up on the screen right now. So hold on, real quick. I'll put up a new share screen. Share. Okay. So I'm gonna put up the website that I use. Apex Trader Funding. Yeah, I should be able to see it on my screen now. Let me see. Let me share screen one. So this is the website that I use, guys. It's 71% off now for an account. Make sure you come all the way down and get the Trade Evade plan. You can get these plans up here, but you'd have to use NinjaTrader. And at that point, I couldn't help you because NinjaTrader is far more advanced. I use Trade Evade. So come down here, grab a Trade Evade plan. So with the 71% off, this 167 will be like 30 or $40 a month. Or like right here, it'll be like $40 a month. So what this is ooh, sorry guys, it's coffee. So what this is an evaluation, right? You get access to 50K or 25K in capital. Your goal from there is to make 1,500 in profit without letting the account go down minus 1,500. If you grab the 50K account, your profit goal is 3,000 without letting it go down minus 2,500. You pass these accounts, you pass these evaluations, they'll give you what's known as a funded account. In the funded account, you're subject to the same rules, but you're also going to be allowed to withdraw your profits. So, I mean, they're winning either way. They're winning. They take 10% of your profits every time you withdraw. Um, but I do think this is going to be the best way for you guys to get started on futures. You're going to risk a small amount of your capital to have access to all of this capital. So the same psychological effects are going to be there as learning to trade with your own money, right? It's not going to be all of your money. It's going to be their money, but it's going to have the same psychological effects, knowing that, okay, this is going to lead to a payout, knowing that, okay, now this is an evaluation where I'm actually being tested on my trading skills, where I have rules to follow. So it's the same psychological effects of trading with real money without actually risking that much capital, right? You're only risking like put the 71% off, you're only going to risk like $40 a month. And honestly, I have rarely paid the month. So what happens for me is I pay for the evaluation and I get the profit goal within the month and I don't even pay the recurring fee. What happens then is they move me onto a funded account and I just pay the lifetime fee and the lifetime fee for the 50K is only 160 and the lifetime fee for the 25K is only like 120 or something like that. It's something like that, something like that. So I mean honestly, if you're good enough, you can just pay the monthly fee, get your profit in a week or two and not even pay the recurring, right? You can just make a profit in a month if you're that good. But yeah, highly recommend looking into apextraderfunding.com. I also have an account with Take Profit Trader. I haven't passed the evaluation on Take Profit Trader yet. There's a lot of these guys. There's so many prop firms out there. So just find the one that works the best for you. I started with Apex Trader Funding because they have the cheapest plans. I mean, $40 a month, like that's nothing. Whereas over here, I had to pay $100 a month for my 50K account, but they have a 40% off right now. And they have better rules, in my opinion. Whereas they have a trailing drawdown, meaning you can't let a trade go minus 1,500. Take profit as an end of day drawdown, whereas at the end of the day, you can't let your account go minus 1,500, if that makes sense. So where you're in a trade and it goes minus 1,500, you fail the account. If you're in a trade that goes minus 1,500, but then goes plus 2,500 at the end of the day, you're not going to be penalized here at Take Profit. But the reason I switched over to Take Profit is because I'm at the point where I'm getting withdrawals from Apex, but the withdrawal rules from Apex is they want 10 active trading days before you can withdraw. And me personally, I don't like to trade every day. I don't think you should trade every day. I think once you actually become full time, you should trade like 3 times a day max. Um, Sorry, I heard me. So the difference in take profit trader is once you make your profit, they let you withdraw at day one. So once I pass the evaluation, if I make $400 or $500, I can withdraw it right away. Whereas in Apex, I would have to trade 10 days to get, I have to trade 10 extra days. Take profit trader, I make my $500 and withdraw it same day. So, so I have a few accounts with Apex, and then I have one account with Take Profit. Take Profit, I have an evaluation account. Apex, I have 3 funded accounts. I have a 50K and 2 25K funded accounts on Apex. So I passed the evaluation 3 times, and I'm gonna pass this evaluation. Let you guys know how that one goes. And honestly, guys, I'm gonna keep passing evaluations. Like honestly, what are you talking about? Like this feels like a money. Like this feels like an infinite money glitch. Like I don't know what to tell you guys. I'm gonna like Apex. They allow you to have 20 accounts. So like of course I'm gonna take advantage of that. Are you kidding me?
Yeah.
So yeah, it feels like an infinite money glitch to me at the moment, but it sounds again. I know it sounds like roses and everything, but these are actually strict rules to abide by, guys. So don't go into it thinking that it's gonna, if you're, go into it, thinking that you're new to it and you're not going to make the money right away. Go slowly. I know you guys see people out here passing their evaluations in like a day. It took me like almost like I didn't get the recurring fee. So it took me almost a month to pass my 50K account, and that was just one contract at a time. Slow and steady wins the race. So yeah, there's no reason to rush these. You have there's no time limit to passing evaluations. But once you start passing them, take advantage of them. Grab as many evaluations as you can. Because if you're good at trading, guys, like this is so stupid. Like, are you kidding me? Like I'm getting withdrawals from these guys. But, all right, guys, I'm out of here. This shit is amazing right here. So takeprofittrader.com, apextraderfunding.com, get funded, use their money, and make your own. So yeah, that's it, guys. Have a good one. Thanks for joining me. Have a good one.